This is video one. What is a self-directed IRA or SDIRA? Let's break down what a self-directed IRA or SDIRA is in a clear and comprehensive way. The core concept, what is a self-directed IRA? At its simplest, self-directed IRA or SDIRA is an individual retirement account that gives you, the investor, direct control over your investment choices. Now, while a traditional IRA or 401k is typically limited to stocks and bonds and mutual funds offered by brokerage holding account and, Fidelity and Charles Schwab and so forth, an SDIRA opens the door to a much wider universe of alternative assets. So think of it this way. The standard IRA, you can choose from a preset menu like fast food restaurant. Or a self-directed IRA, you have the keys to the entire grocery store and buy the ingredients to cook whatever you'd like. So what are the key characteristics of an SDIRA? One, broad investment options. It's the main attraction. You can invest in a vast range of assets, which include real estate, residential, commercial, raw land, tax liens, also options, leases, and so forth. Precious metals, gold, silver, platinum, palladium, bullion. Private companies, you can invest in startups or private equity LLCs, cryptocurrencies, Bitcoin, Ethereum, promissory notes and mortgages, paper. You can act as a lender. You can also invest in livestock and agriculture, breeding cattle. You can invest in taxi medallions or intellectual property and more. The second major point is the custodian is the key. The custodian is approved by the IRS and the Department of Labor. You cannot just hold these alternative assets in a standard brokerage account. You must open an SDIRA with a specialized custodian or trustee that is willing to administer these non-traditional investments. They handle the paperwork, the record keeping, and they ensure IRS compliance, which is a special compliance through the IRS. But they do not give investment advice. So if you want to ask them how to do a wholesale deal or a lease option or rehab, they're not going to give you any advice. But the big thing is you are in control. You are solely responsible for researching, selecting, and managing your investments. The custodian will not vet the quality of an investment for you. How a self-directed IRA works. The process is different from a standard IRA. Number one, you open an account, but it has to be through a specialized custodian. Number two, you have to fund the account. You can contribute money just like you would contribute to a regular IRA, subject to the same annual contribution limits. This is 2024's numbers, $7,000 or $8,000 if you're 50 years old or older. You can also transfer or roll over funds from an existing IRA, 401k, or other retirement plan. Direct investments. You can find an investment opportunity, like, for instance, a piece of land or a private loan, and instruct your custodian to send the funds from your SDIRA to complete the purchase. Title and income. The investment is titled in the name of your IRA. Now, for example, it would be XYZ Trust Company FBO or for the benefit of John Doe IRA. So you could uh, do Penske Trust Company FBO for the benefit of John Smith IRA. All income generated, rent, interest, dividends must flow back into the IRA. And lastly, expenses. All expenses related to the investment, the property taxes, the maintenance, etc., any costs, they have to be paid from the SDIRA. You cannot pay them personally. This makes it difficult to do rehabs and other situations where you have expenses. You cannot pay for them personally. All the money has to come from the SDIRA. The next video is going to be the biggest risk, prohibited transactions and disqualified persons.